Good stuff for today. Let's go ahead and get rocking and rolling. So in this process, right, what we want to talk about today specifically is going to be the process, right? Understanding the overall process of multifamily. How does it work? Taking a deal from where you mainly know nothing all the way to being able to close a deal. And the importance of knowing how that all happens is for you, the investor, or for you, whether you are a passive investor or active investor, understanding how that works so you know where you can plug in, so you know what your operator, your sponsor is doing. If you are the operator or sponsor, knowing all these different factors, how they play together. So if you don't know me, I am a former software developer. So I tend to still think along those lines, and I have that little um, code brain, right? If you want to call it. And then this is the multifamily code, go figure. But part of that is just thinking about things in little compartments, little buckets, right? And so you put everything as a microsystem, and then you combine all the different parts of that microsystem together, and that's what gives you your master system and your overall functionality. So that's what we'll be digging into today. For those who do not know me, my name is Jason Stubblefield. I have been investing in apartment buildings since 2015. Built a portfolio, grown a portfolio, actively investing in future deals. And so part of this is just to be able to share information with others, bring a group, get a community, who's doing deals, who's investing. Let's talk about it, right? So if you're able to see my screen right now, this is my website, snscapitalpartners.com. You can take a look at some of our investor testimonials, some of the deals that we've done, find out more about our business. Also, if you are interested in hearing about our deals, right, we have the Invest tab where you can come join our community. So if you are interested in passively investing, we do have opportunities. If you're not hearing about those opportunities, it's because you are not on our passive investing list, right? So if you do want to hear about those opportunities, we do have something that's pretty interesting right now. But you want to register on that form so you can hear about things in the future as they come out. So fill out a brief form. We'll have a conversation, and then we will see if what we have works for you. All right. So with that being said, please, if you are on Zoom, appreciate it. I like seeing the faces. I like seeing the eyebrows. Like who's confused with what I'm talking about? Who has no idea what the hell I'm talking about? And you know, if you don't have clothes on or you're not presentable, whatever, you know, don't don't cut your camera off. Spare us with that. But for those who are active, right, you know, I like seeing what's going on. So we get the most out of this. And also, I'll say this: we always have Q&A, but I don't want this to be the Jason rant session, right? I definitely want to be more about you and getting your questions answered while you take time out of your busy Tuesday to log in and see, you know, join a meeting like this. So let's go ahead. First thing I want to talk about the decision. And for me, I know that was a very huge part when I got started with this. And I have to bring that up because I think that just being able to clear your mind from all the flutter is such it's so important. Because when I got started with this, I tried everything before, right? I'm just trying to look for financial freedom. I was a residential real estate agent, and I was trash. You know what I mean? I mean, I was sell a couple apartments, not apartments at the time, a couple of single families a year, but I wasn't good, right? I didn't have business systems dialed in, but that took time. I also, since I was a software developer, I tried to create an app. I built the app. I spent nights and weekends doing that. It went nowhere. I made no money off of it. I also still tried other ventures like, what else did I do? I was in Amway. Somebody talked me into doing that for a minute. But all these different things, right, that I sort of did along my journey of trying to get into apartments. When you look at it, it's distractions. You have one main problem that is trying to solve your economic problem, and you end up just trying to do that in multiple ways. But for me, I found a lot more traction in my business when I was able to focus on one thing and to try to do one thing to the best of my ability. And if you like how I was and you have a W-2, you're now stretching your time. And if you're like I was and you have a W-2 and a family, Well, now you even got more time to manage it or to juggle, right? So making sure that you got that decision, hey, I'm in apartments or I'm not in apartments. And I feel like for me, I was able to be a better apartment investor once I stopped trying to do everything else. And just ask yourself that question. Is it better for you to give 100% of you to the thing that's going to get you financial freedom, or should you put 20% of you or 25% of you in multiple different things? So if you can just make that decision and get clear about it, I think that it opens you up to put a lot more of your own personal power into trying to make your investments happen and being able to move the needle, because it takes a lot of effort and energy to get the plane off the ground, right? It takes a lot for to have liftoff. So just being able to do that is a powerful decision if you can make that at one point. So next thing I was also talk about is whether you want to be passive or active. And so I've had conversations with people and they say, I want to get into multifamily. I want to buy apartments. And it's because I want passive income. And I feel you, right? I understand that. But what I'm doing is not passive, right? It's very active. It takes a lot of energy. It's time consuming, and it's building a business. Now, that business will create income streams that you can make without necessarily having to put effort into it. But it's not a passive business. So making that clear distinction, do you want to put your time, effort, and energy into building an apartment business, or do you want to invest passive, right? So I invest passively as well. But in those deals, I just cut a check to another operator and they take my funds and then they cut me back checks and I see my money grow from that. So those investments don't require any of my time at all, right? But the investments that I'm doing require a significant amount of time, and you have to set those systems up. So making that clear distinction to you, do you want passive? If you do, how's that going to work for you? Or are you willing to roll your sleeves up, get your hands dirty, and start buying apartments actively, right? So if you're unclear about any of that, right, clarity is going to be huge as well. If you take 3 days, 3 months, consult with your spiritual guide, rub crystals together, go see a psychic, whatever you need to do to sort of get make a decision, right? If you would do that, you'll find that once you come out on the other side of that with a clear intention of what you want to do, that's going to be one of the better ways to help propel yourself forward. So, all right, that was decision. Now let's get into these systems, right? The first system that I want to discuss today is your underwriting system. This is the process by which you get deals that come to you. You then analyze those deals and you determine if they are good investments for you or not, right? And so being able to do that is a system in itself, right? And so again, going back to what I said with the software development background, being able to understand how to set up a system is important, because you set up that system, then you move to your next system. So the underwriting system is going to start with you being able to just have conversations with brokers. I primarily get deals from brokers. I've talked with some wholesalers. I don't know if anybody's got a wholesaler that is bringing them off-market deals that are actually worth something and they truly have access. I would love for you to tell the group like how that happens, who that wholesaler is. What I found is a lot of people want you to submit proof of funds before they give you any sort of financials about it. And it's because they don't have access to the deal. They talk to a broker who actually has the deal, says, if you bring me a qualified buyer, then I will share the commission split with you. And so to prove you're a qualified buyer, now they got to get your proof of funds and your letter before they can even get cut into the deal. And so it puts you on a daisy chain. So I focus on just talking with brokers because they have the majority of the deals, but they're more experienced than you are oftentimes if you're new to this. And so being able to have those conversations, understanding the lingo, cap rates, cash on cash returns, IRRs, and being able to just effectively communicate with the broker is part of your system, setting that up. And then you want to have those deals coming to you. So I did another live about this. If you're interested, if you're in Facebook and you want how to get that started, if you want to know how to operate with brokers, how to get tons of brokers coming to you. Send me an email, or if you're on Facebook Live, shoot me a message and I'll send you that training over. But part of that is building your system, right? Getting the system to where deals come to you, and then effectively underwriting. So underwriting, that's the process by where you take a deal, you look at the numbers of that deal, and then you determine, hey, here's what my offer should be. Here's whether I should make an offer or whether I should not, right? And then also, how does that look? How am I financed? How am I structuring this deal? Okay. So that's the offer system, or that is the underwriting system. Getting deals coming to you, taking those deals, and then being able to determine, is this a good deal? Is this a bad deal? Does it work for me? Does it not? And then being able to make a decision based off of that, right? So that's your first system that you want to set up. Any questions about that? Are we good? Are we clear? All right, we got nothing. I'm checking. Hey, Irish, if you would monitor, I'm on one screen today because I decided I want to look different, but monitor the Facebook just see if we get any questions off of that, please. It'd be greatly appreciated. So, all right, that's system number one. The second system is now your offer system. All right, so now you have a deal that works, but what do you do with it, right? How do you, amongst all the other buyers in the world, try to stand out to that broker in order to make your offer and get that offer accepted? Doesn't matter how many great deals you can find. If you can't get a broker to accept any of your offers, you're never going to make any traction in the business. And so the next system is just the offer system. And so how does that look? We start off with a letter of intent, right? Letter of intent, that's a quick, hey, I like you, Mr. Broker. Do you like me? This is how much I would pay. This is when I would close it. This is how much earnest money deposit I would put down. Having that template letter ready to go is part of your offer system. And then there are also other things that we do, right? For us, we're going hard on all the deals that we make offers on. So what is going hard? Going hard is where you say, when that earnest money deposit, I'm going to not only put that earnest money deposit up, but we're so confident in our ability to close that if we don't close the property, you can keep our earnest money deposit. And is that a little ballsy? Yes, right? But it's what's happened in the market as we've transitioned and deals have become more competitive. In order to be able to win deals, you have to understand that it is somewhat of a competition. So that's what we do. You may not do it in the very beginning, but understanding what you're going to do is part of your process, right? So you put all that in your letter of intent, how you're going to do that. Also being able to understand the earnest money, how much earnest money you're going to put down. We also have a letter, right? So we put together, every time I'm writing an offer on a property, I put together a little letter to the owner. Hey, Mr. Owner, blah, 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 like you, you've done a great job with the property, would love to buy. Why am I doing that? Because every other person may not do it. So I'm trying to raise to the top of the level. So if that owner is sitting with 4 qualified offers at full asking price, how do you stand out with doing that, right? And so I try to put that letter in there. We also do proof of funds, right? And you may have proof of funds, do proof of funds. It's something that we've done and seen a lot of success with. But if you don't have it, you may want to put down your team's credibility. You may want to give other brokers who you close deals with, right? Hey, here's our last transaction. Reach out to these people, right? You're positioning yourself. But putting all this together into just one package, right? You take it together. This is how every offer that we make looks, right? And so that's part of that. James, I read the name. That's Jim coming in. I should have known that's a good question coming in from my buddy there. Let me read that. So, are you still going hard in this market with the conditions changing? It is becoming more of a buyer's market. Absolutely. So what I'm doing right now is, yes, we're still going hard on offers. However, those offers are lower and they're also coming with financing contingencies, right? So we took financing contingencies out. We threw that away for years and just, banks were reducing interest rates You could get low money down, maximum leverage. That was sort of that was the law of the land then. But this market is always changing. So what we thought about doing it now is like, hey, let's go ahead. Let's still continue to put to go hard, but we're also going to have a financing contingency saying that, hey, these factors from our lender have to be they have to hold up for us to be able to buy at this price, right? And so that's something that we're doing. If anybody else, Jim, I know you've got good ideas about, being creative in this market, but thinking about that, right? Thinking about how you're going to make your offers allows you to be faster, right? And so that's part of your offer making system. All right. Any other questions about that, about writing offers, earnest money, going hard? If I see nothing, all right, we'll keep it moving then. Cool. So, and thanks for sharing that, James Jarman, right? So appreciate that. Next is your capital raising system. All right. So when you are going to start raising capital, it's not just going to happen, right? I can attest that at least it didn't happen for me, right? You have to come up with ways to have people that don't know you, right? So how does that work? Starting off, no one knows you as an apartment investor. So the way I started was with my own database, and this is a list, right? A list of people that are in your phone that that you can say, who would potentially give me some money, right? If I had this, and it'll be I don't even like that I said that, give me some money. Who was investing, right? Who likes taking their money and earning a return on that money that I know, and who can I share how I'm going to give them a return on their money that may want to partner with me right in the deal. And so just thinking about that, making a list in an Excel spreadsheet, here's your name, here's your phone number, whatever, and just reaching out to them, having a meaningful conversation. So Jason, what do you mean by meaningful? This is a conversation that if it's a buddy or something of yours, you need to put in another level of seriousness, right? And so the way I did it, maybe it's a sample deal, right? Or if you're underwriting deals and you looked at a deal, you put together a property package. If anyone's is interested in seeing one of our sample deals, I have that, reach out to me and I can share one. But as you're having this conversation with people, say, look, this is what I'm trying to do. This is what I'm going to do with a deal like this. Take a look at it. What do you think about it? Would you invest, right? And so that allows you to up the ante a little bit on the fact of, is this something that's real, or is this my beer buddy where I just threw out a conversation with? Now, 2 weeks later, it's like, I really didn't think anything about that or not, right? So making a list of people that friends, family, whatever. If you're like me and you got a lot of poor people in your family, just being honest, then you're going to have to go past that, right? And that's where you may get the coworkers, neighbors even, or whatever. But you want to be able to have a system by which people who don't know you or don't know about you as a multifamily investor can start to know about you like that. And so there's two ways you can do that. You can either build your own network or you can join a network. What you're looking at right now is my network, right? Or something that I'm doing in order to bring people who may not know about me into my world to say, oh, that's that guy right there. I heard him talk something about multifamily apartments. Maybe I'll have a conversation with them, right? This is what I do. So you can build your own platform. It could be a YouTube channel. It could be Instagram. It could be Meetup. There's tons of ways to do it, right? But what are you comfortable with doing that you're willing to commit to doing for an extended period of time, right? I do not like any commitment that you are not willing to do for a year. And so you can be a little bit overzealous in this and say, hey, I'm going to go and I'm going to do 3 meetings a week, right? Or I'm going to make 10 posts a day, whatever it is. And then you burn out after 2 months and there's nobody who's responding to the stuff that you're putting out. I know that because I've done it, right? it's a grind, you know what I mean? So you have to be consistent and say, I'm going to post, and I'm going to post regardless if somebody sees it, I get a comment, I get a like, I get a subscriber, whatever. But just making that slow commitment, and then you build on it over time. That's one way, building your own network. Another way is being able to join a network, right? And so I've also done that, where I would just join other communities and make it very intentional on my part to say, I'm going to come in this group and make a post once a week, twice a week, or I'm just going to start direct messaging people in this group and try to set up meetings with them. Right now, you don't have to try to build a platform. There's already one there. You're just coming into that platform and trying to start conversations to get those people into your world, right? Jeffrey Allen says, I do not like bridge loans right now with the interest rates fluctuating. I would agree, right? That is it's ugly. You know what I mean? When it comes to what they're doing with that, what we've been doing is purchasing interest rate caps. Also spoke with someone who talked about a corridor, and briefly, I don't know if anybody knows what a corridor is, but it's basically a interest rate cap is very expensive right now. I mean, it's definitely in six digits depending on the property that you're buying. What a corridor does is you buy one rate cap and then you sell another rate cap. And so you are essentially getting a buffer in between the two caps that the one that you bought and the one that you sold. And it allows the one that you bought to be purchased for a lower price than had you just bought it alone. Right. So you're getting a reduction off of that initial rate cap. And then there is basically that spread where you profit. And the goal with doing that is that you purchase the future cap, or you sell the future cap to the bank in an amount basically above the projections of where you think the Federal Reserve would take rates. So it's a little complex. I just found out about it recently, but it's something that we're doing or definitely exploring to be able to cut down some of the costs. But I would never try to take a bridge loan in this environment without some sort of rate cap. All right, is it realistically possible, thanks for the question asked, to work towards becoming a general partner in a commercial multifamily project despite having a W-2 job? Yes, real life testimony right here, right? So I was software developer, family, and still was underwriting deals and doing that. And because one of the things I wanted to share is that there's a lot of information that's what you should do, but then there's also how do you do it. And when you have a full-time job and a family, you can't devote the time that other people may be able to devote to doing stuff. So you have to get clever. And that's why I do things like leverage virtual assistants by working on a piece, like is what I'm talking about here, setting up a piece of the system and then being able to move on to the other one. So great question with that. Where was I at? All right, the capital raising. So building your own system is one, joining somebody else's system is another one. But then you are now in the world of marketing and it becomes a numbers game, right? How many people can I talk to? And then what percentage of those people are going to invest with me? What I've seen, what other operators who I've talked to have seen from the pool of people who raise their hand and say, yes, I will invest with you. You're looking at somewhere between 10 to 20% of those people that will actually invest. Okay, so you can reverse engineer that looking at the type of deal that you're looking to do and how many investors do you have, how many investors are you going to get, and then seeing which ones of those will actually invest. Now you've got an approximate number of how much capital you can raise, even though you're relatively new. That's one. And also while I'm at that, I also talk about building or leveraging somebody else's network, right? So in the beginning, you're just starting off, you're fairly new. You may not have a strong investor base yet, but you can leverage somebody else who does, right? So borrowing someone else's investor database, of course, you bring them a great deal and that works for them and their investors. You make them you form a partnership, and now you've got access to capital that you may not have had before. Okay. So being very deliberate about that. And then finally, the final system is being able to operate, right? So just quickly review before we wrap it up. You've had your initial part of making your decision. You have then built your underwriting system. You've got deals coming to you. You effectively underwrite those deals. You make offers on those deals. You know what you're doing, how your letters of intent are going to look. You are raising capital, you're leveraging your network, other networks, connecting with other people who have existing investor databases that can become your investor database. And then finally, you're going to operate, right? So as you get those deals approved, now you're talking about your asset management, your ongoing operations. And so the way that looks for us is every time we take on a new property, at the bare minimum, we're meeting once a week, maybe even twice a week. So it's once a week dedicated, and then it's, hey, property manager, I'm going to call you randomly about this question, or you call me randomly about this question while we get everything set up. What are those meetings involved? You're talking about your income and you're tracking that to your underwriting that you did in the very beginning, right? Am I where I should be according to where I projected to be in my pro forma? Also, you want to track your expenses, how our expenses look. What we do is we share our pro forma, we share all of our assumptions with our property manager prior to closing the deal and have them sign off on it. So they're looking at us and saying, hey, does this number make sense? We budgeted, $1,500 of payroll, whatever, $1,500 per unit for payroll. Does that work or does that not work? Yes, it works. No, it doesn't. But when we start operating, now we're holding the property manager accountable to what we said. Hey, I shared this budget with you 2 months ago. You said payroll numbers should be here. Why are we not here? All right, we're below it. Great. But this is part of your job as operating and making sure that you get the returns that you, I won't say promise, right? You can't guarantee, but you're definitely working very hard to do better or exceed the projections that you gave to your investors. And so that's part of doing that. Also managing your capital expenditure budget. So if you're doing value add, hey, we're going to paint, we're going to do flooring, we're going to do appliances. What does that look like? What is that budget? Are we in that budget or are we not? So that's how you hit your returns. Obviously, you will at some point dispose of the asset, but how good you operate allows you to then be able to then be able to hit those returns or even exceed those returns to your investors. And so with wrapping this up, that may seem like a lot to you. You're like, oh, Jason, that's a lot of shit for me to do. And it is, right? I'll be honest with you, but you don't have to do everything, right? So in the beginning, you may just set up your underwriting system to find deals, right? And then you say, okay, I'm going to find deals. And now you look to bring that deal to somebody else who is already proven themselves to be able to raise capital. And you say, hey, here's my deal. What do you think about it? I'll take a back seat, right? And let you sort of drive things because you have more experience than me, but this is a good deal. You may start off and decide that you've already got a network. You feel like you've got people around you that are good at raising capital. So you may just start off on the capital raising piece, right? And now you've got a strong system or strong network of people that can raise capital. And now you're looking to go partner with somebody else who may have a deal, right? So you don't have to do everything all at one time. You build your system and then you look for the next piece. So you build your underwriting system and now you go look for your partners, or you build your capital raising system, then you go look for your partners. And then as you get into operations, there's asset management fees that can help you do with that. And your offer making system is something that you really have to just create one time and then make tweaks to it as the market changes. Mic drop, I'm done. I got I got nothing else. That's the process in a nutshell. Hopefully that gives some clarity for people who are trying to figure out, hey, how do I make all these things work together? Okay, Vickers dropped this information. Appreciate that. Very right. That's how you do it, right? He dropped his I don't know what this is, but I think it's some way to get in contact with him in the chat. But when it comes to building your network, right, he joined right? He understands the people on the Zoom call, and then he dropped away for people to get in contact with him because he had to go at 11:30. Right. And so as you're building this is exactly what I did. I would go to meetings and actually do something with the business cards, or go and attend meetings and reach out to the people who I met while I was there. If you're on the Zoom, you will get a link that will have everyone who joined the Zoom on that. And so you can start building your network that way, having conversations with other people. Are there any other questions while we are still live? Let's see. Anyone unmuting themselves? Jim, I do want to talk to you, my man. I had a idea, but I won't bore the group with it right now. But maybe
give me a call.
Yeah, I'll give you a ring and sort of talk about it.
One of the things also that I think you should have, especially, my gosh, in the last week, if you were looking at buying something in Florida, you might be rethinking that. What is going to happen in the future with insurance rates, and FEMA flood insurance is getting very, very expensive. I mean, I think Florida is going to be radically changed after this Hurricane Ian in lots of ways. So, so you can have last year's pro forma in Florida, but it's not going to do you any good if you don't understand what they're going to do in the future with insurance rates, claims. Sorry about that. Construction materials, a little Clint Eastwood for the morning there.
Have a shootout over
there. So I would be interested in, maybe in the future we could talk about some of these coastal markets, and if anybody's investing in those, because that can get real interesting real fast. And even down the road, it may have looked good 2 years ago, but now when you go to get your insurance renewal, it's going to really change your returns to your investors. I mean, some of these, Texas and Florida especially, have some pretty unusual things about insurance, roofs, stuff like that. So anyway.
Yeah, no, I think that's I'm glad you brought that up, because that's one of the things that I didn't get into that I probably should have covered. And what Jim is talking about is the fact that these prices change. And I said something a while ago. I was like, your underwriting model, underwriting spreadsheet is really dead, right? And not the fact that you don't use it anymore, or that it's worthless, but you can no longer take these assumptions from 2 or 3 years ago and just plug it in. I wouldn't even take a debt assumption from 2 weeks ago and use it right now, because things are changing that fast. And so part of your underwriting process, or your underwriting system that you set up, is confirming assumptions. And what you do is you have an insurance broker on your team. You have a mortgage officer or lender, or somebody who's going to quote you debt on your team, or multiple people on your team that do that. A tax assessor, right? Someone who's going to tell you what your potential tax liability will be realistically, right? Those are valuable pieces of your team. And so before you just go make an offer, you want to confirm that, because what Jim was mentioning, if you stuck a number of $400 a unit for insurance, and then you buy a deal, and then the insurance quote comes back at $800 a unit, right? It can blow your assumptions, or it can blow your deal out of the water, and going from a good deal to a bad deal. So doing all those things ahead of time is part of your system as you create this thing, right? And so once you do that, you don't want to depend, at least for me, I don't want to depend on me for anything, really, when it comes to doing a deal. I want a property manager to tell me what my rent should be. I want a property manager to tell me what my expenses should be. I want verification of financials to tell me more what the utility cost is. I want an insurance agent to tell me what my insurance cost is going to be. And I want a loan officer to tell me what my debt's going to be. So there's no original inputs into this system. It's just reaching out to the right people. But when you do that, you have a much better understanding of how your deal's actually going to work, because you've you basically had a conversation with the professional who can provide you the service or the quote or whatever. So good stuff there.
You can also, Jason, as I'm sure you do, you can put that condition in your contract offer that this offer is based on the broker quoting me that the insurance rate is going to be $250 a door, or $350 a door, or that the mill rate's this, and this is what I can expect on taxes based on this price. In addition to what your loan approval. So if the broker's giving you those numbers, you want to flesh them out. Just send the contract over with that in a condition, and before he sends it to the seller, he's going to call you up and said, "Hey, it might be in there, but it's not really going to be like this." So you can find out. In addition to having your own insurance agent, your own mortgage broker, just hold their feet to the fire, because a lot of the agents, not a lot, but we both come across plenty that don't really bake in the correct real estate tax change. If you're buying something for $3 million and it's going to $10 million, they'll tell you that you're only going to have to pay 80% of that or 70% of that. And if you underwrite it like that, it's going to come back and bite you in the backside. So,
yeah. No, good stuff. So to make sure I understand that, you're talking about basically making an insurance contingency part of your offer as well as a financial contingency.
Yeah. I just had a deal in Florida, actually, where the guy quoted the insurance rate at that. When I checked it out, it's like, dude, you're not even in the same universe. And then, so then I put my offer in based on what I thought it was going to be. And then it came back that the guy who had a higher price, he didn't want to do it for the same reason that I had put in my offer at the price of what the insurance was actually going to be. But he ended up getting the deal, but the price got adjusted. And I just said, look, you're going to have to adjust the price later. So I'm just going to be upfront. I don't want to retrade at the table. I'm going to tell you right now, this is what the insurance rate is going to be on based on your, cap rate and what you said the property is worth. That's what this insurance rate, but that's not what it really is. But that's not what the taxes really are. So accordingly, this is how I came to this offer. So you just call the broker and tell them, hey, this is why my offer is not what you're expecting. They're not going to get mad at you. They may not take your offer, but they're going to respect the fact that you explained how you got to that number if it's different than what they want, and you keep the relationship with the broker.
Yep. And that's part of, that's gold when it comes to making offers right there, to be able to justify it. And if you can go to a broker's underwriting and poke holes in it, part of getting deals accepted is how confident they feel on performance, right? And so most sellers don't want to have their property tied up by somebody who didn't estimate their assumptions correctly and then say, oh, the deal doesn't work, because it's just time and energy. So if you can implement what Jim is talking about and being able to explain, hey, my offer is different than yours, and here's why, I think that it makes you get a lot more credibility with the broker, and your offers can get accepted better, right? But just because that broker knows that you've done your homework before you submit the offer. So good stuff.
Maybe, if I send it over with the, I'm using farmers insurance, not to say it's going to be farmers, but just as an example. And this is what they quoted on the building, because that's all I use. Maybe the broker is going to come back and say, hey, I got another guy, and here's the quote he'll give you, and it's better than what you got. You can redo your offer with better information and expand your vendor list. Find somebody else. Maybe you're getting. Maybe there's a reason the offer's lower. The deductible, wind isn't covered, or storm surge, or whatever. Talking Florida again. But I'm just saying that you can also use that to get the brokers to give you other vendors that will give you quotes that do meet those numbers. And they can say, no, Jim, you're wrong. Here's a guy that gave me the quote based on the same building, and go to him and get that verified. And then you can adjust your offer. So it can be a helpful process as well in terms of, maybe the broker does have somebody that can meet the number that they pro forma, and you just don't know that vendor.
Yep. No, I like it. And this is all a team sport from multiple people, right? And so the bigger picture of what Jim is saying is like the broker's part of your team, and everyone who's confirming your assumptions, like the lenders are all part of your team. So the more that you can embrace that and say, hey, if we want to get this deal done, but here's where our numbers are right now. Can you fix it? Can you change it? Do you have a recommendation of how to make it work? Because this is the beauty of multifamily. We're all buying just on the numbers. It's nothing is emotional. It's just like, how can we make the numbers work? And so if you can employ people of your team to help you make the numbers work, the better your offers are and the more deals you'll get done. So good stuff with that. Let's see what else is in the chat.
I think what Richard just put in there as well is getting the loss run on the insurance claims for that building for the last 3 years is something you should definitely ask for, as well as a detailed breakdown of their repairs that they spent over the last 3 years, because that'll kind of tell you they're fixing a lot of water problems in this building. So there must be something, maybe there's a bigger problem we need to look into, or maybe it's electrical. They have a lot of electrical repairs. Maybe there's something wrong with the wiring or something like that. So I think that's great. That's a really great comment that Richard made. That I forgot about. Getting the copy of the loss run on the property from the when you call the other agent or use the existing agent that's doing the insurance on that. Sometimes you can get them to get the loss run, and you can also do that with. It's a little harder to do it with FEMA to get the flood insurance report for, I just know because I do a lot of stuff in Norfolk and everything has flood insurance, to get the copy of the flood insurance claims over the last 20, 30 years on that property is helpful in managing your risk in terms of thinking, well, we're going to get hit again. Of course, you can always get hit, but if that property's had no claims in 30 years, that's a pretty good sign.
Yep. One other question before we call it here. But Kwame had an excellent question when it talks about, can you talk about the best way to find a partner to raise capital if you come across a deal before you build that network? And the answer is that you have to network. So my first syndication deal was just that. Had a deal, great deal, didn't have the capital in order to be able to close it. And so what I did was literally reach out to every person that I knew of that I thought would be able to help me. And so part of that was really looking like an idiot a little bit. You know what I mean? So I'm calling someone once I exhausted my network, it sort of goes to like, well, now I'm talking with people who I don't have much credibility with. But I think that you need to share if you run into that situation, right, sharing the positives about the deal, understanding what it is, and then being willing to negotiate on the splits, right? So as you work with someone else you may not have built a relationship with, they're going to want to control or own more of the deal, and just being willing to be flexible to get it done, right? So you do that. You also try to exercise extensions to give you more time with the property. And it's really, there's not a secret to it, but it's making connections and also leveraging out other networks. And so let's talk a little bit too, because I also have some other brainstorming ideas or people that I will connect you with, right, if you're dealing with that. So, but good cut. Yeah, I can't talk. Good question with that. Cool. So I think that this was lots of information. Jim, really appreciate what you shared. Thanks for the questions. Ash, Richard, thanks for the comments. Kwame, thanks for the question. Appreciate you all. I'll be back here next week. We'll have another interesting topic about multifamily, hopefully help you learn and grow your business. So appreciate you taking time, and I will see you in the future. Have a good one on purpose, because you deserve it.
Bye, everybody.